Morning, Steve here in Chicago with the morning grain comments. Well, prices are a little bit lower overnight. Corn's down 3, wheat's down 5, and beans are down about 4 cents. The outside markets, the dollar is a little bit higher. Stocks are lower, and crude's a little bit higher. Yesterday, stock market sold off on bearish manufacturing data here in the United States, and the strength in the U.S. dollar continues to offer resistance in commodity prices. One private firm came out and estimated the U.S. corn yield pretty much near the USDA's 168.4. They're about a bushel better. They've got a 13.9 crop versus their previous number of 13.8. And kind of looking at the numbers, they're kind of up a little bit in the eastern corn belt as far as corn production is concerned versus their September numbers. Bean production, 3.6 billion bushels, about unchanged, or maybe a little bit lower than their previous estimate. They've got a yield of 48.1 versus 48.3, which is not a big difference as far as yield numbers compared to their previous numbers in the USDA. I think the big thing is that the market is expecting the USDA could, in October 10th, bring out a lower corn and soybean production number. Corn maybe because of acres, and soybeans maybe because of yield, and that maybe somewhere between 2 and 3 million acres of beans may not make it to maturity before the year ends with a normal freeze or frost. So yesterday, November beans rejected the 920 area. We continue to watch for any news of China buying, any trade deal. Looking down at South America, it looks like the Argentina 10-day forecast is drier than normal, but Brazil could see normal rains. And so normal crops down there could offer some resistance to the marketplace. I think we need to see a lower U.S. crop to push over that 920 area. Support right now is at 890, and some people feel that without a U.S. deal with normal crops in South America and the pressure in the outside markets of the higher dollar and concern about the recession could push prices eventually below support. Over the corn, we filled the gap from the USDA August crop report. I think the futures market need confirmation of a lower crop to push above the $4 level area. I think support is around, let's say, the 360, 370 area. U.S. export demand and ethanol demand remains slow, which offers resistance to prices. And if the South America and Ukraine has a good crop, you could see corn prices leak a little bit lower. So I would suggest that if the USDA does come out with a bullish report on October 10th, farmers should have resting orders to sell corn maybe 10, 15 cents higher than the recent high this week. Wheat was unable in December to trade over $5. Still is plenty of wheat in the world despite concerns of dryness in Australia and the quality concerns of the Canada crop. So a higher dollar and could offer resistance to wheat because wheat prices here in the United States are a premium to most other origins. Funds yesterday, buyers of wheat, 20,000 corn, 13 beans. We show them almost even in the wheat, still short about 100,000 corn and short about 20,000 beans. So the USDA September grain stocks report really triggered some short covering by the managed funds as they try to figure out what the U.S. crop is. This is probably the latest that I can remember in my 30 years that we still don't know corn acres, bean acres, final corn yield, and final soybean yield. So that adds a lot of uncertainty to the marketplace. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.